Hey, it's Clay at claytrader.com, and in this video, I want to share with you 3 big reasons why I believe you should at least give futures trading a try. And in my mind, and as hopefully I can demonstrate to you, is it all revolves around one word, and that word is flexibility. Futures trading truly does give you the opportunity at great ways to be flexible, and these ways really do matter as traders. Now, that's assuming you want to be a serious trader and you want to be in this for the long haul. If you're just here to be a degenerate gambler, well, then this probably video is not for you. But assuming you do want to be serious, then these areas of flexibility really will make a difference. So let's get right into it. Now, before I can get into reason number one, let me just set up a little bit of context here with what is known as the pattern day trading rule. So if you're somebody that's either thinking of trading stocks and options, or maybe you've already been trading been trading stocks and options, then you're probably either already familiar with this and extremely annoyed by it, or you just don't know that you're about to be very annoyed by it, depending on where you're at in your journey. But I don't want to go deep down the rabbit hole of the pattern day trading rule. I threw all this stuff on the screen here just so you can see all different components. But the one component I do want to focus on is maintaining an equity balance of at least $25,000 in their margin account. In other words, unless you have $25,000, you're going to not be able to trade as much as you want to trade. I'll say that again. Unless you have $25,000, you will not be able to trade as much as you want to trade, which sounds bizarre, and it is bizarre, and I guess just chalk it up to government regulations. But in the world of options and stocks, unless you have that $25,000, you are not allowed to trade as much as you want. You're going to be limited in the amount you can trade. Now, I know some people say, well, Clay, you could use a cash account for this, but that still does not take care of the whole settling problem, meaning you have to let your cash settle and all of that. Now, I don't want to, like I said, go too far down into the weeds, but just understand that the pattern day trading rule, whether it's with a margin account or a cash account, at the core does not allow you to trade as much as you want. So this leads us now into reason number one in regards to why you should at least try future trading, and that is there is no pattern day trading rule. We can just say bye-bye to that and be done with it. And in my mind, that's a great reason in and of itself. Reason number two has to do with your schedule. I get it. Everybody's got different schedules. Everybody has different commitments. But the nice thing about the world of futures is that they're open pretty much around the clock. Generally, futures start trading every Sunday at 5 p.m. Central, so 6 p.m. Eastern Time, and close the following Friday at 4 p.m. Central, or again, 5 p.m. Eastern Time, or whatever time zone you're in. But right there in and of itself, like I said, keyword being generally, because there's little nooks and crannies here, but from a broad brush perspective, futures market is open pretty much around the clock, and there is a 60-minute little break that occurs each day. But other than that, they're open a whole lot. So reason number two, just schedule flexibility. They open up a world where you don't need to be forced into some little small time slot because they are open so much. So if you're somebody that has a tighter schedule, futures trading can offer you up a whole lot of different opportunity and advantages that maybe you didn't know actually existed. So in my mind, this is another great reason to at least give futures trading a try. Reason number three, what I would call flexibility in risk and learning. What do I mean by that? Well, let's offer up a little context here. So this is a real life friend that is getting into trading. His name is Jim, and he sent me this text, and he said, had a nice $200 gain. So I upped my position size and got absolutely crushed. I didn't honor my stop loss and somehow spiraled to negative $2,000 for the day. Just a brutal, humbling lesson for me to stay disciplined no matter what. Now, on the surface, you would be thinking, oh, wow, Jim's just getting started, and he just cost himself $2,000. Wow, that is a very expensive lesson. But no, it did not cost him $2,000. And this is where prop firms come into the picture. I don't want to go too deep down the rabbit hole, but just to explain and to offer up that context, with prop firms, you put very little of your money on the line, and then you have a whole lot of upside potential, assuming that you can prove yourself as a trader. So if you go to the link down below, I'll put it in the description box. It will link you to this exact prop firm, and I link to this one because this is the one that I'm using. and I'm very pleased with them. And a lot of members of my community use them, so they have a good track record. But for example's sake, so like I said, there's a how it works section, and right there you can see all the different steps. But what I want to point out here is down here. Now, this was not what Jim did exactly, because he was just totally paper trading, meaning he was doing strictly simulator trading. But let's just, so I can illustrate this example, let's just suppose that my friend Jim had actually invested into one of these prop firm accounts. Now, he would have had $170 to purchase the account. Now, make sure you also use the link down below, because these companies are always running promotions. So in all actuality, Jim would have been less than this. But for example's sake, let's just say that he was at a time where he didn't feel like waiting for a promotion, so he just paid the $170 to get this prop firm account. So on that day where he lost that $2,000, in all actuality, he only lost $170 because the $2,000 didn't hit him directly. It only caused him to, what I would say, fail the evaluation period. Because again, you put up a small amount of your money, then you have to prove yourself as a trader, and then after that is where the upside potential is really, really pretty amazing when you stop and think about it. But you do first need to prove yourself as a trader. In this situation, Jim did not prove himself as a trader. He failed with a $2,000 loss, but again, from Jim's perspective, he did not lose $2,000. He only lost the cost of the account, which was $170. So when you stop and think about how Jim is gaining flexibility to learn, but learn at a very, very risk-friendly way, because it did not cost him the total amount where he just spun out of control. He learned, like I said, that brutal and very humbling perspective, not like I said, but he said, that brutal and humbling experience, but yet it would have only cost him the expense of the account. And if, depending on where you are in your journey, hopefully you can be honest with yourself. So if you are honest with yourself, then I'm sure you're saying, oh yeah, I've had those moments. I can relate to what Jim's gone through. Or if you're just literally a beginner, please don't think, well, I'm never going to be like Jim. I'm not going to do that. We've all said that. We've all said that, and then we found ourselves in Jim's spot. But when you can gain that flexibility to learn at very, very friendly risk perspectives, then I would say that's another good reason to consider futures, because within futures, you have the prop firms, and the prop firms allow you to, yeah, you're going to take $2,000 losses, but as explained, it's not going to actually cost you that much. So you can learn and you can survive and stay in the game that much longer, because had that been Jim's actual money, I mean, that's a very, very expensive lesson. $2,000 compared to just $170. I think most people would say, you know what? I'd like to learn that lesson for only $170 as opposed to $2,000. So I think we can all agree on that point. So to wrap things up and bring it all back to that word flexibility, these would be the three reasons. Reason number one, just flexibility to trade. With that pattern day trading rule and the way it limits you, which is ridiculous, you don't have those limitations. So you truly have the flexibility to trade, or maybe said another way, the flexibility to trade as much as you want. Reason number two, you have the flexibility of the schedule, because futures are open basically around the clock. You can just fit things into your schedule that much easier. And then reason number three, flexibility of risk and flexibility to learn at those cost-effective ways as we just discussed. So I hope this helps. I hope this piques your interest. Now, if you do want to learn more about futures, I do offer a totally free 4-part series, and I will put a link to this down below. Like I said, totally free, and it'll give you a good foundation of what the futures market is, how it works, and all of that. So definitely check that out and be sure to give it a serious try. And then also, one final time, as far as the prop firms are concerned, if you want to learn more about which one I'm using, how they work, and or potentially use it, make sure you use the link down in the description box, because that will give you the best possible deal whenever you're watching this video. And then finally, if you're interested in learning more about the tools that I'm using to build consistency and manage risk, then definitely get signed up for this free live webinar that I'm offering. So if you go to the link down below, it'll take you to the when the next live class is, or you can just go to claytrader.com/live. And like I said, that will walk you through when the next live webinar is. But I would highly recommend you get signed up for it, especially if you're a beginner just getting started and wanting to learn more about how to approach the markets in the smartest way possible. So I hope this video helps. If you enjoyed it, and if you want to just support the channel in a super easy and free way, please hit that subscribe button. It really does help out. If you do have any other questions on this class here, or futures trading, or whatever I talked about in this video, please leave those down in the comment section, and I will do my best to reply as quick as possible. So thanks for watching, and yeah, get out there and consider giving futures trading a try.